The Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The disinflation process is well on track. Inflation has continued to develop as staff expected, with both headline and core inflation declining in March. Services inflation has also eased markedly over recent months. Most measures of underlying inflation suggest that inflation will settle at around our 2% medium-term target on a sustained basis.
Hello and welcome to this week's fundamental and technical supply and demand analysis video. Thank you very much for joining me, and let's get into the analysis. So it's been a bit of a calmer week this week. Obviously the last 2 weeks we had all the tariff uncertainty. Things are sort of calming down a little bit, but there's always the threat of the tariffs until the deals get done. There's always the threat that something could come out, and I feel like markets are very wary at the minute. You know, at any point a tariff agreement or a tariff breakdown feels like it could happen. So it's important during periods of uncertainty that you reduce your risk, which is just a sensible thing to do, really. You know, if there are a couple of trades that I have entered this week, but I have not risked the full amount that I would normally risk in better market conditions and in better trading conditions. So I will show you a couple of trades I had this week that I'm still in. One of them I have got a 1-to-1 in, which the way I trade, I enter two positions usually. One at a 1-to-1, one at a 3-to-1. So once the 1-to-1 gets hit and I make back my entry for that, the trade becomes risk-free then. And if the trade comes back and stops me out, I'm break even. So I'll go through a couple of them trades briefly in this video today, and just explain the risk management and the risk to reward and why that's important in trading. But firstly, let's just go through the fundamental analysis from Trading Economics. So the week ahead, April 21st, uncertainty on the path of tariffs by the US amid threats of escalation against pledges to strike trade deals will continue to drive volatility across all asset classes. And this is the main thing, guys. At the minute it's still uncertain, so we're not trading on the macroeconomics. I feel like we are slightly coming back into that a little bit with things such as carry trades, interest rates, inflation. They are sort of having a bit of an effect, I've noticed this week. But again, you can see from this first sentence here, the tariffs are still sort of the main threat, and it's important to still keep them in consideration with your trading. Investors will also closely watch global earnings reports. Alphabet, Tesla, Boeing, Intel, IBM, Merck and P&G are set to dominate headlines in the US, while SAP, BNP Paribas, Aon and Sanofi results are awaited in Europe. So these, obviously we trade Forex. I'm not really a stock trader, but it's important to keep these in mind as well, because it's all connected, isn't it? So if these companies have poor reports and blame it on the tariffs, that could trigger a bit of risk off. And then, as you know, there are certain currencies that do better in risk off, certain currencies that do better in risk off. So that's why it's important to just keep an eye on the earnings reports from companies as well. On the economic front, flash PMI readings for US and Eurozone, Japan, India and Australia will unveil the initial impact of tariff threats. Durable goods orders and existing home sales will also be eyed in the US, and key confidence gauges are awaited in Germany, France and in the UK. On the monetary policy front, the Public Bank of China is set to hold loan prime rates in China. So that's basically it, guys. We're at the mercy of the tariffs. It's not the busiest week. The confidence gauges in Europe will be quite telling as well. But yeah, we're still in a sort of wait and see mode. Moving on to something the MUFG posted. So we did have the ECB policy rate decision last week. It didn't really have a big effect on the euro. We had a bit of a sell-off, but nothing massive, as it's sort of priced in, and it also re-emphasizes the fact that markets are concentrating more on the impact of the tariffs rather than the the standard fundamental macroeconomics that we usually trade off. So as expected, the ECB cut key policy rates by 25 basis points, taking the deposit rate down to 2.25. The ECB removed the reference implying policy is still being restrictive, which is slightly dovish, suggesting they have reached some broad area of neutral, but Lagarde emphasised a continued meeting by meeting approach to policy decisions. So sitting on the fence a little bit there. The impact from the elevated trade uncertainty was increased downside risks to growth and uncertainty to the outlook for inflation. Today's decision and communications were in line with expectations, and we see limited impact on rates and FX. So yeah, that's basically it, guys. It's a bit of a nothing decision. Obviously, in normal market conditions, a rate cut, what we would do, we'd look at the rate cut. That's usually priced in, and we would look at the Lagarde's language towards the next meeting, and if they're dovish, obviously the euro becomes a bit of a sell. If she's hawkish and she says she sees inflation actually being quite sticky and potentially rising, that is obviously makes euro a buy, but only against stronger or weaker currencies. As we know, we trade in pairs in Forex markets. So, but at the minute, the tariff uncertainty is still here, so that's why it's not had much of an effect. And also, like I said last week, the euro has become a bit of a risk-off currency, especially in this situation with the tariffs. So the euro is benefiting from that, and it's also benefiting from the fiscal policy from the other month as well. So overall, the rate decisions, the statement and the press conference were broadly in line with expectations. However, we would certainly conclude that there was a slightly greater emphasis on downside growth, which is quite bearish, risks relative to upside inflation risks than perhaps expected. Lagarde clearly did not want to entertain for any amount of time the potential for inflation to move higher. The focus was very much on negative growth concerns, which reinforces the prospect of more rate cuts ahead. Lagarde's communication certainly differed from Fed Chair Powell's communication last night, with Powell emphasising much more on the inflation risks. This of course makes sense given the political scale of tariffs hitting domestic inflation in the US. So in FX, I'll just read this bit here. In FX, of course, the co-moves in FX and rate spreads have broken down. So this means basically that the fundamentals are broken down. So the co-moves in FX and rate spreads, that basically means when we're trading in normal conditions, if the euro has a lower interest rate and the dollar has a higher interest rate, and the dollar's data, which is from the macroeconomics, if the dollar's data is better and the euro data is worse, that means we will see euro USD being a sell, which it's quite, once you get your head around it, guys, it is quite simple, which is why it's quite annoying at the minute trading. It's when you get conditions like this, it can be a bit frustrating, because you're reading so many different perspectives and people saying, oh, the euro's a sell, the euro's a buy, And that's why it's so important to when you get situations like this, just to sit on your hands. If you're a fundamental trader and a fundamental swing trader like I am, that's my style, that's what suits me. So yeah, rate spreads have broken down due to the loss of confidence in the US dollar in the aftermath of Trump's policy announcements. If those rate spreads were to reassert themselves in influencing FX, then the dollar would likely recover, and that is because the dollar in the fundamentals is still number one. It's still number one, and if you look at the euro, it's last. So this is why it's a weird time to trade at the minute. Usually number one would be a clear buy and number 8 would be a clear sell. However, due to the tariffs and due to the announcement about the fiscal policy, these are sort of quite rare events, to be fair. Usually it's not as difficult as this to trade and to develop a fundamental bias. So obviously these numbers here give you a look into where the economy is now, but you don't sort of trade that way. You look at where an economy is now. However, you have to also take into account where the economy is going, and that's where the money's made. So it's to buy the rumor, sell the fact. So the smart money gets involved with selling the dollar now, because, for example, the dollar has been quite expensive because it's been number one. But with the tariff uncertainty and with other currencies gaining strength like the euro, that's why the dollar is selling off now, because it was seen as expensive. So basically, if you've got something that's, say for example, I'll try and think of an example that's a bit more easier to understand. So say for example you've got a product, say you've got like a PlayStation 5 and there's a shortage of PlayStation 5, so the prices of them have gone up, but you've got some information that there's going to be 10 factories being built that are going to start producing PS5s, but in like 6 months time. That's going to obviously decrease the price because there's going to be more supply. So say for example you wanted to make some money on selling it, you would sell it now, even though the PS5 is still a valuable asset and its price is expensive. You've got that information 6 months down the line that these factories are going to be built and there's going to be more supply, which will bring the price down because more people will be able to buy them. So people aren't going to pay higher prices because there's going to be more of them, if that makes sense. That's sort of the gist of what is going on with currencies. So it would imply Euro USD breaking back below the 1.1 level. However, we doubt that this is going to happen at this juncture, and it would take something more meaningful from President Trump in terms of backtracking on trade policy for the dollar to recover on a more sustained basis. And I don't think Trump's going to do that. We never know at the minute. It's very uncertain, but this seems to be quite a big political move from Trump. So I don't think he's going to backtrack on it. So to me, the dollar is still a sell. One last thing, I did read this in ING. So they were talking about the US economy and the euro economy, and it was talking about one of the Fed governor, Christopher Waller, who's an influential member of the committee, who is taking a decidedly different view on all of this. He said in no uncertain terms this week that the inflationary impacts of tariffs is likely to be temporary and the hit to employment substantial. So though he didn't quite say it, he strongly implied that the US economy is heading for a recession, which is very dovish for the dollar. And then I was just reading here, which is interesting. Here in Europe, the debate for central bankers feels more straightforward. Growth looks weaker, at least until all that government spending starts to hit the economy from 2026. We'll get an initial sense of that damage next week with the purchasing managers' indices. So again, it's not the clearest, but we have a Fed governor talking about a US recession. which is negative growth. Negative growth usually means weaker inflation, unless there's stagflation, which is higher inflation and lower growth, which is still bad for a currency overall. But yeah, I'm seeing more negatives for the dollar than positives at the minute. A good way to do your analysis is if you can have a sort of a checklist, and you basically just list the negatives that you read for currency and the positives, and if there are more negatives that you read then the currency is a sell. Simplifying it a little bit, but that is a good way to do it. And at the minute I'm seeing more negatives for the US dollar than positives. Usually as well, in the past, the dollar would have benefited from a situation like this because it's a risk off currency. It's a safe haven currency. If I just go to risk off, so yeah, so if you look at this, guys, in risk off, the USD usually does strengthen, but in recent years we've sort of seen it not happen. Obviously the Swiss franc and the JPY is a safe haven. We've seen them increase massively this last few weeks, and also the euro. So this is why the euro is benefiting. It's got a few more positives in its basket. I'll just quickly go through the chart. So like I said, USD is number 1, United Kingdom's number 2, and it's not moved any places recently. Swiss franc is number 6, so it's quite low down, the Swiss franc, and it's not moved any places, but it is benefiting from risk off. When risk on comes back into the market, and we were discussing this in our trading group, the Swiss franc is going to be a decent sell, but it's all about the timing. I did actually go into a sell on the Swiss franc this week. Swiss franc JPY, it is in profit, and we'll see how it goes this week. New Zealand dollar is number 5, and it has actually moved 3 places positively this week. JPY is number 4, it's moved up 2 places, which is a negative, but JPY is still a buy at the minute for me. You know, it's on a hiking cycle. It's the only currency that's on its hiking cycle, so it's seen as a decent value trade. Euro area is number 8, and it's moved up 2 places, which is a negative. Canadian dollar is number 7, and that's moved up 3 places this week. With I think it had some inflation figures out this week, which actually came lower than expected, which is potentially turning the Canadian dollar into a sell for me. And the Australian dollar is actually number 2 as well, which is moved up 3 places. So yeah, the Australian dollar could be a potential buy soon, once the tariffs sort of get out of the way and we come back into risk on. High beta currencies like the Australian dollar could potentially do well, so that is one to watch at the minute, the Australian dollar. So moving on to the charts, I'll just run through quickly the charts. Not much movement at the minute for the dollar. It sort of just moved sideways in this small range. We did make a bit of a supply zone here, but it's not really the best supply zone. Really, if I want to sell the dollar, I want to try and get up here. Will it get this high? I'm not sure. So if we move up to this supply zone, that could be a potential sell up here. However, we're still sort of at the lows. If we look, we've made this massive move. I usually, as a swing trader, like to see more of a substantial pullback. So yeah, really, I'd like to see prices come to here. If I do take a trade in this supply zone, I will probably reduce my risk because it's not the best trade really. On the equally weighted dollar index, same again, we did make a supply zone here, and it is a bit of a support and resistance zone as well. If we draw this along here, you can see support, 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 resistance, resistance, resistance. So it's not the cleanest level, but so if we get a move up to here, potentially get a sell there, take it down to this demand zone. But again, I'd prefer a move up here, but are we going to get a pullback that big when the dollar's quite negative sentiment around the dollar? I don't think so. So basically what we probably waiting for now is maybe another move down, to here to create another demand zone round here, another supply zone round here, and then a pullback, and then we get the sell. So we have to be patient, guys. We have to wait for the decent setups, but the way I trade, it's a high probability trading strategy. So if you like to win more than you lose and get these big risk reward trades, you do have to be patient, but to me it's a strategy that works for me, and it's a good way to trade. It's how the professionals trade as well, to be honest. So that's the dollar. The euro, last week I did get in on a euro pound trade, which I got a 1-to-1 on. We came down below the 50 level on the RSI. Usually I prefer the RSI to come to an extreme, but I took the trade anyway, as there were some other confluences on the pair that I liked. So for the euro, again, hopefully I can make a bit of profit on that trade, and then if we get a pullback down to these levels and then take a buy up there, that would be great. However, there was a bit of negative sentiment around the euro this week, obviously with the rate cut and Lagarde coming out and saying there is risks to growth. However, it's important in trading not to look at everything in a vacuum. So everything is being affected by the tariff, so really everything's going to have risks to growth. Do you know what I mean? So you're not trading the euro by itself, you're trading it against other pairs, so that sort of cancels out. Do you know what I mean? So if you have the euro is going to be affected by negative growth, the pound as well is going to be affected by negative growth because of the tariff uncertainty. I know they only got 10% tariffs because they don't really produce as much, but there's still that uncertainty there, so it sort of cancels it out. So the negative growth aspect cancels it out, and then we can look to more, well, what does the euro have going for it? It's got the risk off, it's got the safe haven asset. Fundamentally the euro is not doing great, but it's got that fiscal policy that was announced a few months ago, which should increase growth in the future. So yeah, so the euro to me is still a buy, but it's just one to keep an eye on. So really you want a pullback into here, and then we can buy and hopefully ride it to the top. The pound's a tricky one again. If you want to sell the pound, you probably want to look for prices to come up to here, the top of this zone, and then you can get a nice sell down here. If you want to buy the pound, you're probably looking at coming down to here and then getting a buy in here. But yeah, the pound's a tricky one again. Fundamentally it's doing okay, but it's just got a few, I've been reading a few negative things about the pound as well, such as the spring budget. Tariff wise, it's I've read that it is quite insulated from the tariffs because of the economy that we have. We're not a manufacturing nation anymore. You know, we're more of a service-based economy, so the tariffs aren't affecting us as much. But yeah, it's a tricky one to trade the pound at the minute. It's not really benefiting from risk off either. So yeah, that's the pound. The Canadian dollar to me is a sell. Let's just draw this. Do we have a bit of support and resistance here? We do, looks like. Just draw this up here a little bit, not the most obvious level, but you see resistance, support, resistance here. So this is a nice strong supply zone here. So if we want to sell the CAD, which I do, we're looking for a pullback into here, and then we can get short from up here, which would be nice. Like I said, guys, before, The Canadian dollar has dropped 3 places to 7th in the fundamental charts due to its inflation. Inflation year on year came down 0.3%, and inflation month on month actually came down to, why is that grey? Came down 0.8%. So yeah, it's and as well, the core inflation is 7th out of all the countries, and it came down 0.5%, which is the biggest drop out of all the countries, which is good for consumers. You know, it's good that the prices are coming down, but that obviously means that the Canadian dollar will lose a bit of value, which makes it a sell for us. So yeah, I'm looking for sells on the CAD, preferably against the JPY, which would need a pullback up to here, which would be a nice trade, as well as potentially the euro. So we're looking for pullbacks to here ideally, and then we can ride it back up to the top there. So that's the CAD. The Australian index, yeah, not many new zones have been created really. That's sort of a zone there. You can see it's moved up, it's moved down, and it's made a new high, but it's not the best demand zone. It's not the best. The Australian dollar again is one that is a bit tricky due to the tariffs. However, I did read some articles saying that the Australian dollar is now very undervalued. So once tariffs sort of move on and we get a bit more certainty, the Australian dollar could be a nice buy, you know, around these levels, potentially down here. And also on the fundamental chart, it's actually moved up to number 2. So yeah, Australian dollar potentially moving into a buy, but obviously as we have the tariff threat looming over, and we know Australian dollar is linked heavily to the Chinese economy, there's always that risk there at the minute. So yeah, not the strongest buy for me at the minute, but could potentially move into a bit of a buy, especially against the weaker currencies like the Swiss franc, and the euro, the dollar potentially. Moving on to NZD, so we did make a new demand zone there right at the top, and we did come into this supply zone last week, and we had a bit of a sell-off. Now, is that people buying the New Zealand dollar, or is that like to buy the New Zealand dollar, or is that people buying the New Zealand dollar in profit taking? Because we have had this massive move up here. Fundamentally, the New Zealand dollar was a sell for quite a while. It has had some positive data out recently, but again, to me, it's not the strongest buy, and it is at risk off being a high beta currency and linked to China economy. However, I did read some articles this week saying how the New Zealand economy is actually less at risk from the negative sentiment in the Chinese economy than the Australian dollar. So, in which we've seen that actually in the pair. Excuse me, I have to have a glass of water. Dries your throat out talking this much. I never speak this much, so I'm not used to talking this much. And it does dry your throat out talking non-stop for this long. So I'll have to have a drink of water. So yeah, you can see in the Australian New Zealand dollar that the Australian dollar has actually been the loser in the pair. So this to me shows that the New Zealand dollar is stronger out of the two. Doesn't mean it's a buy, but if you want a good gauge of which economy is doing worse in the risk off, you just look at this pair, and obviously you've seen that the Australian dollar has actually sold off, meaning that the Australian dollar, the New Zealand dollar, is the dog with the least fleas. Do you know what I mean? They're still not doing great, but the New Zealand dollar's doing better. So yeah, still for me not a buy, not really at the minute, just one to keep an eye on. Now down to the Swiss franc, which has done very well as a risk off currency. However, as we've sort of seen risk come back on into the market slightly, you can see here the VIX, which is known as the fear gauge. This sort of measures volatility in the S&P 500, which basically shows when there's risk off, you can see it spike up above the 20 mark, and you can sort of see it's come right back down. Obviously this was COVID here, so it has started to come back down slowly. We're not underneath 20 yet, which means we're not out of the woods yet, but it has started to come down, which means markets are sort of, you know, they're warily coming out of risk off. So I actually took a trade this week on Swiss yen, when the Swiss franc was up here. It was still at the highs, so the Swiss franc is seen as expensive, so it's a good place to sell the Swiss franc. So we'll see how that goes. We did actually make a new demand zone here, which we're in at the minute, so hopefully the Swiss franc can move down to sort of this level, and that will be a successful trade. If you want to buy the Swiss franc, probably buy it down at this level again, and we might start to range like this, or prices might even just sell off down to here, because if risk comes back on, the Swiss franc fundamentally is not really the best. If you look at the Swiss franc's inflation rate, it's 0.3. Now most central banks aim for 2. That's sort of the standard percentage of inflation that they see as acceptable for a stable economy. So being at 0.3, that's very low. So they will want to potentially keep cutting and potentially even go into negative rates to stimulate the economy, to get their inflation up, to balance things out. So it's always a balancing act. So yeah, so if risk comes back on fully, the Swiss franc is a massive sell for me. And we are expensive as well, so we could see some big moves in the Swiss franc coming up, which would be nice. We can get some good risk reward trades, but yeah, we'll see. Moving on to the Japanese yen. So Japanese yen sort of chopped around last week, not really making any new highs or lows. Yeah, so again, the Swiss franc, the Japanese yen for me is a definite buy. But we want to probably see a bit of a pullback into here if we want to get long now. I am currently long, obviously, on the Swiss yen, so hopefully we can make potentially a move to retest these highs. We are below 50 on the RSI, but so is the Swiss franc. So yeah, it's not the best divergence trade, but the idea is that the risk is coming back on. Money will flow into fundamentally strong currencies like the JPY, and money will flow out of fundamentally weak currencies like the Swiss franc. The risk to the trade is obviously if we get risk off again, but then again, JPY is a risk off currency, so it's a bit of a balanced trade. We'll just keep an eye on it next week. Hopefully I'll just show you actually while we're here. So yeah, this is the trade. As you can see, we got short around here. We did get close to hitting a 1-to-1, which would have been nice. I've drawn a bit of a trend line here, so hopefully we're at this trend line here. Hopefully next week prices will come down to here, get us a 1-to-1, which will make the trade risk free, and then I will look to hold potentially down to here. I mean that's a long way down. I don't know if it can get that far, with all the risk in the market. But even if it gets down to here, you know, I might consider taking profit here, which would be, you know, a nice 1.7 to 1. Ideally though, I want to get a 3 to 1 on this position. Yeah, so that's the trade anyway. We'll see what happens next week. So that's it for the currency index, guys. I will quickly just move through the major pairs. So euro, dollar, sort of ranged up here. Really, we want a bigger pullback to get long on this pair. So a pullback to here would be ideal. That would be very nice, but can we get a pullback all this way? You know, it's good 400 pips. So euro pound, I did get long on this week as well. I did get a 1-to-1 here, so this trade is risk free. So obviously we risk the same on each position. This gets a 1-to-1, meaning that if this comes and stops me out, I've already made the same percentage as I did on this position, which would mean it'd be a break-even trade, which allows me to hold now, because the fact that I'm not going to lose anything from this trade because we hit a 1-to-1 gives me the confidence, and this is all about the trading psychology as well behind it. So if you know that you're not going to lose any money, it's easier then to hold the trade and swing trade it, you know, to the highs. If I've still got, you know, risk on the table and prices come down here, it's more of a psychological negative on me, really. So yeah, so that this trade in my eyes is a successful trade at the minute. If we can get up here and make a 3-to-1, that'd be brilliant. But yeah, bit of negative sentiment on the euro last week, but hopefully prices can bounce back, and the money will flow more into the euro, with the things such as the safe haven aspect, and the fact that the pound as well has a lot of negative things going for it as well. So yeah, that's the trade. Yeah, we did come down into this demand zone here, and we made a good move up. So I mean, technically we are still in this demand zone now, so you could look for buys where we are and try and trade this range, and then obviously for sells you're looking up here. Pound dollar obviously made quite a big move last week and the week before, but it was mainly on dollar weakness. So yeah, if you're looking for sells, really we want to get up to this supply zone here, which was from September last year, and then for buys you're looking to get a pullback into this demand zone here. The pair for me isn't really, I'm not really paying much attention to this pair because both currencies, there's not really a divergence there. So yeah, I'll leave that one for the time being. USD CAD, again USD's weak and the Canadian dollar's weak as well, so I'm not really trading this pair at the minute. We are in a demand zone now, but fundamentally I have to have a decent divergence, so it's not just technicals, you've got to have a fundamental bias as well. So for this pair, yeah, I'm staying out. Dollar yen, now this is a bit of more of an interesting trade, one I'm looking to potentially get short on. We did make a new supply zone last week, and it moved a decent 160 pips. So if we come back up into here, it'd be a valid trade, but for me, I want to get up in here, up to these highs, which again is a bit of an ask because that is, that's a 500 pip move up, so we'd have to get some decent dollar strength. What will probably happen, we'll get another move down, maybe a bigger move down like this, and then we'll wait for a pullback into some of these areas of supply, and then we can get short again. Yeah, another good thing to look at as well when you're deciding whether a supply zone is worth it is to change your time frame to a 1 month down here, and then I use the baseline. So this gives you an indication of where fair value is, and as you can see, this is the supply zone here, and we're nowhere near fair value. So you're always wanting to wait for price to get to above fair value, or at least fair value, to sell. Because if you want to sell anything, like I used the PlayStation example before, you want to get a fair price for it, don't you? You don't want to sell it cheap, you know, unless you're really desperate. But we're not desperate really in trading. We make the rules and we trade when we want. So yeah, you know, we're not desperate to get in a trade. There's always going to be an opportunity, so it's always best. And this is for a swing trading strategy as well. So it's always best to wait for prices to come above this fair value level. And if we can get above it, even better. That means we're getting a better price. You know, prices are getting more and more expensive, so we obviously want to sell when prices are high. So yeah, that's the USD JPY. Just waiting for pullbacks basically. USD Swiss franc, again, it's a bit of a weird one because both currencies are weak at the minute. Fundamentally the USD is weak, but mainly due to tariffs and risk off and future uncertainty. However, the data for the US dollar is good. The Swiss franc has only benefited from risk off movements. So if things start to turn around and the market starts to see the tariffs as sort of being even positive for the dollar, you know, the USD Swiss franc is quite cheap, so we could look for buys, but that's more of a speculative idea for the future. So yeah, not really a pair I'm interested in at the minute. But if we do, say for example, we do get a move up to this is quite a strong supply zone, very strong supply zone. Prices have moved down, you know, a good 400 pips. So say for example prices start to move up into here and we get another risk off event, this would be a very nice trade. This would be a very nice trade. Obviously that we would want the Swiss franc to be in a cheap area to buy the Swiss franc, and we'd want the dollar to be expensive, so we want that divergence. But that would be a nice trade again. And finally Aussie USD, we are in a bit of a supply zone now, but again, not really a pair I'm looking to trade, with the dollar being weak. So yeah, I mean, if you do want to sell the Aussie dollar, now would be an alright time technically, because we are at these highs. But yeah, fundamentally it's not great, and like I said before, the Australian dollar has moved up recently on the fundamentals. So yeah, not a pair I'm interested in at the minute. The divergence isn't there for me. And then again, NZD dollar, we did talk about last week there being a potential trade. Was it round here or something? Didn't work out. I didn't really get involved in it. Yeah, so, but we are in a supply zone again. So I mean, the NZD does have more going for it than the Australian dollar when it comes to the tariffs and being more insulated from the tariffs. However, fundamentally, yeah, it's not for me really. Not at the minute anyway, because like I keep saying, guys, when you trade, and when you trade this way with the fundamentals, you really only want to go for the the highest divergences possible. So you want the highest strength currency that's got the most positive sentiment around it versus the most negative currency, and that'll just give you more confidence in the trade. That'll probably, it will increase your win rate, and that's why it is at the minute quite difficult, because the divergences are quite tricky to see. And even the smartest people, the people who are doing the analysis, on Bloomberg, MUFG, ING, even they're finding it hard at the minute. So yeah, NZD USD I'm going to stay out of as well. So really the main pairs I'm looking at is probably CAD JPY, Euro Swiss franc. If we get a pullback to here, that'd be nice. USD JPY, that is a sell for me. Euro pound, I'm in this, so we'll see how this plays out. Swiss yen as well. As risk on comes back into the market slowly, this could roll over and could potentially move down to here, but we'll see. Quick look at gold as well. I got long on gold down here last week and took profit here. If I would have held, annoyingly, I would have doubled that position, but it is what it is. I took profit at a place where usually prices can sort of take a reversal at a strong supply zone at a level of resistance, but the momentum behind gold at the minute, understandably so, with all this stuff going on in the global economy, gold is probably seen as quite a safe buy at the minute. Quite a safe buy. So yeah, that is everything, guys. So I hope that makes sense. Another tricky week again. So let's hope we get a bit more certainty next week in the markets with the tariff stuff, and we have some decent data points coming out next week. Nothing major really. I think the business climate one for the euro will be quite important. That comes on Thursday. But however, I think these surveys were done before Liberation Day, so before the tariffs came out, so might not have a bigger an influence as we might think. But yeah, guys, that's it. I'm gonna stop talking now because my throat is actually really hurting. Like I said, I'm not a big talker in real life, so these YouTube videos that I'm making are quite a shock to the system. I'm talking for 40 minutes to an hour, and yeah, my body's not used to it. So my throat might get used to it as I keep making these videos, but yeah, my throat is killing. So yeah, guys, I hope you all have a good trading week. I hope you got some benefit from this video. Now, these videos can be quite long, but they are packed with really good information. Yeah, I've been trading for 5 years now. Fundamentally, I've gone through a lot of ups and downs in the markets, but I'm quite confident to say that I'm up there with very decent analysis. So if you follow these videos, I know they're quite long, but grab a coffee or two, grab a latte, grab some snacks, sit down, watch these videos, and yeah, hopefully they can help you develop a fundamental bias. And hopefully, guys, as well, things will get easier. Things will start to get easier as the tariff situation moves on. And you'll see as well that once things come back into a more certain period, trading can actually become quite easy. And I hope to show that in future videos with some more successful trades. But for the time being, reduce your risk, because obviously uncertain times, you don't want to risk full position. You don't want to risk, you don't want to risk more when it's uncertain. Take reduced positions if you do enter any trades, And yeah, that's it, guys. So yeah, like I said, have a good trading week, have a good week in general, and if you like the video, please like it, please comment. I'm a new channel, so I'm trying to build a bit of a following, and yeah, I hope you have a good one, and I will see you in the next one. Take care.